All right. So um, today is July the 24th, about 5 in the morning. I should probably turn this off. We like we like Darcy. She's cool. Where is she? Oh, anyway, there she is. All right. So let's take a quick look at Google, trading roughly around 196.97. They had earnings yesterday along with Tesla, which is getting hit for about 20 bucks, and IBM, which I'm not really interested in. Anyway, I sold a strangle in Google. I did with the expiry July 25th, so expires tomorrow. Sold the 180 put for a buck 63 with commissions and fees 160 187, and I sold the 205 call for a buck 7, commissions and fees total buck 13 there, so 105 87 and 161 87 for the put. All right, so I brought in a little less than 268 bucks. Let me home in on this. We can see it here. There's the initial cash flow from selling the strangle. Now, take a quick peek. A vol for the put is roughly in the 95, 70-ish area. And for the call, it's roughly in the 87, 80 area. Let me advance in time to today, and it's currently about 5:04, 5:03, a few minutes past 5 a.m. Pacific time. Let me adjust the underlying to 197 so get an idea where we might be. Okay, so making an adjustment in time, making an adjustment in the underlying price to where it's currently trading in the pre, and not making an adjustment to IV, implied vol. I'll get back to this in a second. We are showing a value for these. The puts not quite going to dust just yet, and again, I haven't touched the IV. Puts are going from a buck 63 to 34 cents, and the calls are picking up a little bit of value to a buck 56. So losing some on the call and gaining roughly 2.5 times that. 2.5 times the loss of the call. We're making that gain of 2.5 on the put. All right. I didn't make any vol adjustments, so the vol on the put is going to get crushed. Let's see. This is just going to be, well, that's a uniform adjustment. So let's say that the vol here goes to, let's just say it gets cut in half. Goes to 45. Okay, so the put's going to go to dust. It's going to be worth 11 cents, and not going to touch the IV on the call. And let's see what we have. All right, so it's still, without touching the IV on the call, it has a value of buck 55-ish, buck 54, buck 55. Let's actually increase this, and let's say it goes up to 100. All right, so value of the call goes from the initial sale of 107 to 206. So that becomes a $100 loser, whereas the put becomes a $161 winner. So we're still ahead with underlying at 197, and the following manipulation, or the manipulation I just did on the vol. Let's boost this up to 200. Okay, and suddenly the trade becomes a loser. under these conditions. Now, I don't know what's going to happen to vol in an hour and a half-ish when it opens, but let's say that vol on the call goes to 75. I'm just playing around with these. Now, P&L goes up quite a bit, and it's an $82 winner. Let's make this 65. All right, so a bit more. All right, a bit more, and let's say that underlying goes to 195. Okay, so then it becomes a really good winner under these conditions. Underlying of 195, vol on the put gets cut nearly half, and vol on the call went down by 23 percentage points. It was roughly at 87. Okay, so the risk here at around current prices of 197, we have, obviously we're going to have gamma risk on the call, but the theta, our time decay is helping us out there. So we have a potential, we're going to be battling gamma, but theta is helping out, and then a fair chunk of the P&L attribution is going to come from Vega. That's basically the vol getting crushed in the put, and we also have the favorable directional movement as far as the put is concerned, with underlying trading and trading higher than where it closed yesterday. So it's a little challenging at this point to give a precise P&L attribution because I just don't know where IV is going to open. But we do know that a day has passed, or at least we're going to move forward in time by a day. So we are going to have benefit from time decay. Theta's our friend on this trade, on this structure. Theta's our friend on this structure, and we have to deal with gamma risk on the call. So if the underlying continues to rally, I'm going to pick up short deltas on this position. Notice that with current IV, let's see, gamma is $3.15, and let's say, and that gives us 17 deltas. So watch what happens when we go up to, let's say, 200. So we're going to pick up 3 per point, and we're picking up deltas as expected. 3 and $3. Going to pick up about 10 deltas there. We were at 17. So we have to deal with gamma, and let's see what happens with vol. There's going to be a vol crush, particularly for the puts on at the open, given these prices. So right now about 197 and change, up $7.15. So it looks like we went out at what, 708, now 120-ish, 123, 191.23, and we're trading $7 higher. It did print lower right after earnings came out. I saw 185, and I think it went under 180 by a bit. After I saw the 185, I just took off to go do some other things. But anyway, that's the situation right now. We got this 80.05 strangle cooking, and breakfast is going to get served at 6:30. Okay, that's it for now. I'll catch you guys later.